Hey y'all, welcome to episode 51 of Stock Talk with Josh and
Nico,
Nico. How you doing?
fantastic.
This kind of weird. Like I'm in the studio, but you're, I don't know, at home eating popcorn, candy, just doing the nastiness. But I'm over here being professional. But besides that, this past week was the 4th of July holiday. So, Nico, how's your holiday weekend slash week?
It was good, but the fireworks are starting to become more annoying.
Yeah, you know what? I think ever since like the money that came in with the um what you call it, like it seemed like the fireworks got like when people got more money, like the fireworks got louder and louder and louder.
Yeah,
It sounds
probably.
like a breaker, like just went off or like exploded sometimes. But I'm like, oh my
Yeah,
god.
I know.
But that's the worst part too. Like besides 4th of July, they're doing it for the next couple weeks for the rest of the summer. So like, oh my
Yeah, I
god.
know. They're still lighting them off. Yeah.
Yeah, but besides that, we do have a special guest. So round of applause for our special guest today, and our special guest will be introducing himself right now. So special guest, how you doing?
I'm good. My name is Chris Kirincic, joining Josh and Nico today. Um, Excited to be here. Thanks, guys.
Thank you for taking time out of your busy schedule, weekend, day to actually come on here to podcast with us. So once again, a round of applause. But my first question for Chris is, Chris, what actually got you into the stock market, and actually, why are you even here today?
So answering in order, what got me in the stock market? Um, let's rewind back to like 2008, 2009. I was working at my parents' restaurant for like $3 an hour. You know, doing whatever an 8 or 9 year old could do to help in the restaurant, and I would actually take all of that money and give it to my dad, who would then put it in a mutual fund.
Hmm.
And during that time, he kind of like told me, you know, the high level stuff, what it is, and it's gonna grow over time and all that. And then, it's like fast forward almost 10 years. I'm kind of like finishing up high school, and I'm like, hey, Dad, all that money I like told you to put in like the mutual funds and stuff. And I'm like, how's it doing? And they had like tens of thousands of dollars at that point.
Hmm.
They had some pretty sizable gains, and then I was like, all right, well, I guess it works.
Hmm.
So so
So,
then I really got into it from there.
so what age did you like just like even to this day, are you still sticking with those mutual funds, or did you transition to kind of taking control over your?
No, yeah. So when I went to college, I kind of I kind of took that money out, and I started doing my own research, and I'm like, all right, I'll play with it now.
Hmm.
So yeah, so now I've got like, everybody's got their own like technical fundamental analysis, whatever they do. So I've got my own style that I run with now, and screening and
Hmm.
whatnot.
And
Oh,
is that what's that style like?
So it's it's pretty basic. I try to keep it as simple as possible, not convolute things. One for you can go crazy like trying to analyze stuff, and then two, I've gotta
Hmm.
it's not my day job. So I basically look at like historical PE ratios, like average earnings over years, and I get reasonable like target prices based on a historical PE
Hmm.
and what I can expect the company to earn. And then
Hmm.
if the company's trading at a lot lower than that, it's a good one to go for.
Yeah, that's I kind of been doing the same thing.
Yeah, it's good. It works out for the most part, and it's simple. It's fun to do because I'm like, all right, I'm doing my own homework, and I can trust myself. If I drop the ball, it's on
Yeah.
me. But I think it's better, if you're gonna buy a company and like put your own money up, probably should do your own research rather than like blindly following someone on the internet.
Right. Yep.
yeah.
Because
So
even the most professional analysts are wrong a lot of times.
Well, like a lot of media is just it's whatever sells. It's whatever's
Yeah.
gonna sell some ads. So it's usually like clickbait stuff. Um, why am I buying this most popular stock that everyone else is buying right now? Why is the
Yeah.
market doomed forever? It's all just kind of like what's gonna make you want to read it. Like fear sells a lot too.
Yep.
Like so, it's
Absolutely.
you can stay in your own lane easier when you're running your own show.
Yeah.
Exactly. And actually, that's a good segue. So let's kind of rewind the clock a little back about 3 years ago. How did you feel when the GameStop and like Nokia stocks kind of just blew off and took off? What were you like thinking back then? Like, were you trying to like, should I get into this, or maybe I should not get into that, or things like that nature?
Yeah, you definitely can't escape those types of headlines when they're when they're everywhere. Um, but no, so I like when I was in college, my 2019 or so, and you're really getting into it. Um, I kind of latched on to those like, all right, these are like finding companies that have stable earnings. And then what do they historically trade at for their PE ratios? And like even when there's like the pump and dump kind of stocks, like you could look at the earnings and if the earnings aren't there, why am I going to buy a company that's not making any money? It doesn't make any sense. At least that's like that's the viewpoint. I always stay true to that lens.
So would you
Because
would
then
you
if you start
invest
like
would you invest in any money losing company at the moment?
I've been trying to think about it lately, like because a lot of companies did have a bad year, like in the last year, like a lot of retailers, just like
Mm-hmm.
inventory and stuff, which is
Mm-hmm.
kind of like an anomaly on that front. So, if a company was profitable for the last 10 or 20 years, they might have that one red flag. And
Mm-hmm.
that's when I kind of bring out like average earnings. Like, okay, over like the last 5 years or 10 years, what does that average out to? And if it's still like a pretty good number, I consider it. But that's happening with like retailers, like if you look at Kohl's, like
Yeah.
Children's Place, um, just like clothing retailers really got shafted.
Yeah.
Yeah. So in general, how do you feel about the retail like industry as a whole? Like, do you think they're going to be going up or down in the next maybe 2, 3, or 5 or so years from now?
Yeah, I think long term it's strong. I mean, people are like we're in America, we consume. We love to buy things. So I mean, you look at it historically, it's gone up, and then even like we saw like the revenge buying kind of, when lockdowns came out. So it's like people always like we're hungry to buy stuff.
Mm-hmm.
Um, we always want new clothes, we always want new electronics, even if we can't really afford them. That's why we've got credit cards and all of that too. So
Let me ask you, do you have an opinion on do you think it's more valuable to look at free cash flow or net income?
so I don't dig into that stuff too much, but usually it's more so like, all right, this company is a little bit more complicated than just looking at the earnings. Um,
Mm-hmm.
we'll pull in those items. Um, I usually don't look at free cash flow too much unless it's more of like, okay, is this company like having liquidity problems or like problems paying down like short-term debt and
Mm-hmm.
whatnot? And only in those circumstances I really like I'll pull into that and then maybe I'll look at like simple things like current ratios. So not even getting too deep into like free cash flow.
Mm-hmm.
Um, but yes, I'd probably stick more so towards on those like income numbers, earnings per share,
Okay, cool.
which it could have its own flaws, of course. But I do
Mm-hmm.
that to keep my own sanity and not get too crazy into stuff.
Yeah.
Gotcha,
All
gotcha.
right, Josh, you want to start knocking out stuff on this list?
Yeah, you might as well just bring up what's the first thing on the list.
The first thing on our list is just pretty much the market in general, how much the indexes have gone up. And we're looking at from the beginning of this year, the NASDAQ was $260, and today it's 370. And the P/E ratio for the index is a 25 right now, when typically it's like a 15. So a lot of signs are pointing to the market being overvalued, and probably a good chance the indexes will start coming down in the second half of this year.
Yeah, but I mean, always the market always goes up and down. So is this really a bad thing?
No, it's not a bad thing because I actually sold out of the majority of my index, the majority
Okay,
of my NASDAQ investments. I sold out at like 350, 360. So I actually want it to fall back down so I can buy back in.
there you go.
That's
I
when you
just
look
go,
at the normalized PE ratios. Just like you said, was like at 15 before, and it's 25 now. You
It makes
know,
sense. Yeah.
there's historical numbers for a reason because
Yeah.
everything reverts to its mean.
And I know it's not, the majority of people will tell you it's not smart to be like a day trader or try to time the market perfectly. But when you look at things like this, where it looks like the market is significantly trading richer than where it should be trading, I just think it kind of makes sense. I don't see the market shooting up another 50% from where it's at right now. So I think there's a good chance it'll come back down.
Yeah,
There's
yeah.
it looks to me like there's a lot of there's a lot of concentration in like the biggest companies in all of these indexes,
Yeah.
and so they're kind of getting to unreasonable PE ratios. But what's also happening with that is it's making these indexes go a lot higher. But everything but like that's not in the top 10, 15, 20 like companies of those indexes, they're like they haven't been going up as much.
That's a
So I
good
think
point too.
what's just happened in like this last month or so, it's starting to happen. I'm seeing like those all those other companies that haven't been getting the love lately, like they're starting to
Hmm.
go up, and those are all the companies I hold because they're the smaller
Oh, okay.
companies
Oh, okay.
that have reliable earnings.
Yeah.
So like all of that has been shooting up a lot for me over the
Yeah.
last month.
I mean, that makes sense because there's always going to be that transition of money where when money flows into one sector for a long time, let's say right now it's probably like the Apple, Meta, Google, all those, the Tesla, all those stocks, then the money's probably going to flow out of those and go into, different sectors.
Yeah, I think we're right at the start of it.
Mm-hmm.
All right, so that actually is a good transition. We're talking about the market going up, going up high. Another company, Apple, hits 3 trillion people.
Yeah.
What's that? The market cap, and it says on this Wall Street Journal thing, says Apple is the world's first $3 trillion company. So how are we feeling about that? I'm guessing we all have iPhones, right?
Mm-hmm.
And I have a
Which
MacBook too, and an Apple Watch.
of
So
every Apple device you can have. So
exactly. Well,
definitely a fan of their products. But I looked at the company yesterday, just seeing like I'm like, all right, what would I value it at? And I couldn't get like I think it was for like the next couple of years, 2 or 3 years, that I could like get a value that would justify buying it right now.
Yeah, right. Yeah.
oh no,
That
not
makes sense.
yeah. I wish I bought more of it, like bought more of it, like 6 8 months ago.
Mm-hmm.
Like I did buy a little bit of it, like around December, November. But I wish I actually bought more shares of it. And I would probably would have sold it now.
Mm-hmm.
Do you guys ever hear of like the rule that you should pay like between 1 and 2 times earnings growth for a stock,
You
like a
mean
PE
like you
ratio?
mean like if it's growing 10%, you pay 20 times?
Yeah, like at most you'd pay 20 times earnings.
Yeah, that makes sense. I what I did before was I would make a graph of pretty much PE ratio and then earnings growth, and I chart them all out and see like what the average is. And that's kind of what I came up with was about, I want to say it's about 2 times, if not 3 times earnings growth. But yeah, I think that's a good way to measure it though.
Yeah, yeah. So I was using that. I was trying to use the 2 times number to be the most aggressive on Apple. And if you're looking at future earnings, it doesn't look like it's growing too much relative to like, maybe what it's done over the last 5 and 10 years. It's grown a lot faster than it's projected to in the
Mm-hmm.
future. But I really had to like draw in more of those previous year's earnings growth to like even justify a close number to where it's at today because it looks like it should be like it typically trades at 25 times earnings, and
Mm-hmm.
it's definitely over that today.
Mm-hmm. Well, one of the things I run into is when you're comparing the PE ratios based off of earnings growth like that, the other factor I think is how reliable their earnings are. So like Costco, for example, Costco is not a fast growing company, but their PE ratio is always high. It's always above 30, if not 40. And I think that's just because people really like the stock and they think it's really reliable. So I think there's other factors besides just earnings growth too that you got to look at.
Yeah, that definitely makes sense too, and I use that more so for like all right, like is this company, really like a lot smaller and not as reliable as like an Apple, then I'm gonna
Hmm.
be looking at like a one times earnings
Yeah.
growth. Then yeah, you kind of like you can push and pull on that metric.
Right.
All right, cool, cool, cool. So I guess the next thing on the list is actually oh yeah, this is some news that happened last week or half or so ago. It says ESPN lays off 20 on-air hosts to meet financial expectations this year. And it also says
Hmm.
they are struggling due to competition and other content creators. So I'm actually not too shocked about this because I think what's that like last year it was some rumors of well, ESPN first is owned by Disney, so the Disney Corporation, and Disney
Yeah.
has a lot of changes that they're going through right now. And there was some rumors last year of Disney trying to like spin off ESPN and ABC. So,
Oh,
may,
that's right. That's right.
yeah, so maybe with them trying to spin off and become their own thing, they got to start looking at the budget and see how much money we're spending here for this, such and such, for this person, then for the next person. So I'm not too shocked about this. It is kind of sad because seeing some people that I kind of like grew up watching on ESPN, listening to, but
Mhm.
it is what it is.
I mean, I think Disney is facing so many. It looks like they're facing problems like with every part of their business right now. Like even with the streaming stuff, they're having problems with the whole
The
debate with
parks too.
what's that?
I said with the Disney parks in Florida too.
Yeah, the stuff in Florida too. So I don't know. I hope Disney can turn things around here because I own a lot of shares in Disney, so I need them to get their earnings back up. But yeah, I don't know what they're gonna do because it looks like they're having problems with every part of their business right now.
It's definitely always tough to hear and see people losing their jobs, and given them untimely like hiccups in work and whatnot. But I mean, it's the nature of like our business climate right now. It's so like I don't know, it's so uncertain, I think, when you're
Yeah,
trying to please people quarter to quarter,
yeah,
and you don't know what the next quarter is going to look like for sure. And I think for those companies that maybe don't have the strongest like balance sheets and setups and stuff, it like they could get rattled and start making those quick decisions, and you
hmm,
know and the layoffs and whatnot. And I saw that in I'm in real estate, and there was like a hiring freeze when I was trying to switch jobs and stuff. And I was like, oh crap, this is gonna be bad. So it's companies in all of these different sectors are are really all over the place.
yeah. I think that's just a big part of the how you said like the business environment we're in right now. I think it's a big part where I think it probably goes back to just the inflation problems, probably, but all these companies have had to lay off people. And I think that kind of just goes back to that. So it makes sense that, to cut costs and to increase your profitability, you're going to have to fire people.
Yeah, but with ESPN is a little bit different because a lot of time the people, the talent they're talking about sports is content creation, and
Hmm.
a lot of time with people who watch ESPN, you're firing people that an on-air talent that people kind of like had to have some sort of personality. With sports journalism, like you're firing some people that actually give something to a particular show, to a particular topic, things of that nature. Now you kind of have to
Well, you know
somewhat
what?
replace it. That might be
Yeah,
kind of difficult because what if the next person doesn't hit as like
yeah,
the last person did? That's so.
that's true. And the other thing I think they mentioned in this article about this was how in the last couple of years there's been more competitors now in this industry with
Yeah.
competing with ESPN. Like, um, I mean, I don't hear like I think Fubo TV is one of them. Probably that's probably a competitor.
No,
And
I'm gonna say that too, but the biggest competitor is people like us. What we're doing right now,
you mean just TikTok creators and stuff?
yeah. Like just listen to what we're doing. We're talking about the stock market, but what if we just do a new podcast about sports and that blows up because I say something
I
crazy
get all of my
or
sports information from podcasts, so that tracks.
exactly.
Yeah.
I drive around listening to podcasts. I forgot this one network, Yes Network, or is it something? But it has like a different team. Like for it's a specific podcast for each like NBA team or NFL team. So and I watch that more to not listen to ESPN sometimes. So no, that's another. I think
See,
that's the main
but
big
what I
competitor
don't
is different
what I
people.
don't understand then is if those like traditional media companies like ESPN who kind of built their business on traditional things like people watching TV, why aren't they transitioning then to this new wave of media consumption like podcast and social media stuff? That's what I don't understand.
Oh, they are like some guys like Stephen A. Smith. He's actually started his podcast up again. I think that's affiliated with ESPN, so they are doing it. But it's weird with like sports and like entertainment. Like you gotta say something that can like snatch somebody's attention and like make it funny for it to like really blow up.
It looks like the ESPN podcasts, all the ones I'm seeing are all they got about a 3 to 5 thousand ratings on here, which I'm guessing is not a lot.
Yeah, it's like some are hit, but it's like some aren't at the same time. Like it may be
Yeah,
like
these other people on here. Let's see. Barstool has 79,000 on theirs,
mhm.
and some of these other guys have 30,000.
Barstool
So
too is another competitor. Yeah,
right. So we will see what happens.
yeah. So what's
The next business I want
yeah?
to bring up is Threads
Oh yeah, Threads.
or Meta. So they got 50 million signups in the first couple days.
Yeah, and first let's kind of explain the app. I didn't download it, so you know a little bit more than what I know about it. But it is Threads is supposed to be the competitor, the Joker to Twitter's Batman or whatever you might say. But it's overall a big competitor that kind of recently came out that Meta, Facebook, and it's like through Instagram as well. It's going against
Mhm.
Twitter. So Nico, how you? I know you downloaded the app, so how you like it?
I've only spent about 2 minutes on it, but I think it looks more. I don't know if you want to say boring, but it's not as there's not as much going on. It's very just bland looking. So that's my only critique at the moment.
Chris, did you download Threads at all?
No, no, I'm probably going to be the last person that downloads those. And it's going to be like 2 years after it was a thing.
I got you. I got you. But do you have a Twitter at all or no?
No,
Okay.
no. So that's where what I'm getting with that. I'll probably get Twitter like, as the last person is left, I will probably make my Twitter.
That's how I was with TikTok. It took me years
No, it
to
took
get on
me
there.
it took me years with TikTok.
hmm
But overall, Nico, how do you think Threads is going to play out? You think it's going to be
I mean, I
successful
would think
or
I mean, I would think Meta would be able to pull this off because they pull off everything else they try. They're pretty successful with it. So it may take a couple of years, but I think like their goal is to get to 1 billion users, and I think they can do it. So I don't know. I would be surprised if this turned out to be a failure for them.
yeah, they just somehow got to latch on for and get people's attention. But I did see a funny thing is this past week I actually bring up the tweet, but on Twitter there was a big thing going on with the Twitter rate limit thing. So
Oh
when
yeah.
users were on Twitter, they were scrolling, they would see a thing that said rate limit exceeded. We were all like, what is
hmm
rate limit exceeded? And Elon Musk comes out, he tweets us to address extreme levels of data scrapping and system manipulation. We applied the following temporary limits. Verified accounts are limited to reading 6,000 posts a day, unverified accounts to 600 posts a day, and new unverified accounts to 300 a day. So overall, it's kind of like a limit or like a parental control on what you can actually see on Twitter. So how
That's
are,
weird.
But so, in what scenario is someone looking at 6,000 posts?
Yeah, I know.
no, but you know what? I think it also counts comments, replies too. Like when you're just scrolling, then like if you click on a tweet and then you go to the
Okay. I
replies
mean,
too.
still
Oh
6,000 is a lot. You'd have to spend hours on there.
no, it's not a lot. I promise you, I don't think it's that much a lot.
Really?
No,
I don't know. I'm not a big Twitter user, so I don't know.
you be on
Yeah,
Facebook
I
a lot though,
definitely
don't
wouldn't
you?
know.
You know what else is interesting is this Josh, are you keeping up with the Mark Zuckerberg and Elon Musk fight?
Yeah, Elon Musk starting to sue.
No, not with that. I'm talking about their cage match.
Oh, with Italy.
Yeah, I thought it was funny. I read in the news it says Italian government says they have no problem if Musk and Zuckerberg want to fight at the Coliseum.
Hey, Now, that's a good question. Who do you think wins in the fight? Elon Musk or Mark Zuckerberg? Who y'all think?
I really thought Mark Zuckerberg, but it looks like Elon is getting in better shape, and Elon is a lot taller too. But I would still go with Mark Zuckerberg. I think he has more training and stuff. I put my money on Mark Zuckerberg,
And plus, he got like
and he's
those weird
younger.
eyes too. He looks like an alien. He might got like a. If you pull his arm back, a gun might come out. Pop, pop, pow,
Yeah,
like a cannon.
I'd just like to see them like come out with like all of their electronic gadgets that they have their R
that
and
would
D
be cool.
departments make.
Yeah, that
Yeah.
All right, so I think I got Zuck too. I think I got
do you think? But do
Zucky.
you think it's really? Do you think they would actually fight though?
No, they're scared.
No, I don't think. I mean, they're talking like they are, but I don't think they
They're
would.
not fighting. That would be nice to see. Like, imagine like they did like a pay-per-view boxing
I know.
event. How much money they make
It'd probably be the best-selling fight of all time.
might be honestly.
Okay, next up on our list we have Nike. Last week Nike beat on their revenue with $12.8 billion for the quarter, but they're still struggling to improve their margins and move out their existing inventory. So, what's your thoughts on Nike?
Well, let me start
I
off. I actually, Chris, you go first. My bad. You go.
All right. Well, their big revenue jump was probably likely due to me. I definitely helped them. I helped them move the needle on that one. Uh,
Explain.
they actually they actually had so they had this like sales section on their app, right? And then so you can get stuff like 20, 40% off that are
Yeah, I
like
know.
just
I know you're talking
pretty
about. Yeah.
cool. Yeah, yeah. And then they also had a 20% off whatever those were.
Hmm.
So I saw that and I just went crazy. I bought 5 new pairs of shoes. I bought shirts, like tracksuits.
The socks too.
I went nuts. So no, I didn't get any socks. I saved all my money for the shoes, but yeah, man, I got a lot of stuff. I spent a lot of money with them, but I was getting my stuff like 50% off or more. So it
That's
was
cool.
yeah, so I mean, that all tracks with me how they may have hit those big revenue numbers.
Okay, what about the stock though?
The stock, honestly, I don't know where it's trading at. I don't know its PE.
It's I know it's down a lot compared to where it was like, it hit 180 or something a year or two ago, and now it's at like 105. And I started buying into it just a couple shares just to like, just to keep track of it. But when you look at a PE basis, it's not trading too cheap. And that's why it's like I don't see how there's much room for the stock to go up. If the stock went to like if it went to like $80 or so, I would say then it'd probably be a good buy. But at 105, I don't see it.
I think it's gonna stay there for as long as I don't see anything less than 95. Because like with Nike, like Nike's a
Yeah, but
well-known brand.
it hit 85 a year ago because that's when or less than a year ago. That's when I bought it. Last time I bought it, it hit 85 and then it went up to 120 or something.
That probably the last time I honestly because people are starting to get more money now too. I think going back to work, things of that nature. But
You think
what
so?
I think so. Yeah.
You
Didn't
don't think
Biden
people
just
are
say that the
struggling?
unemployment numbers going down?
I mean, revenue's up, so obviously people are
So
buying.
if I look at its average PE, I'm saying for the last 5 years it's like 46. And basically any company that's like over like I'll never pay more than like 30 times earnings for a company.
Yeah,
Um, but if you do 46 times whatever their like next year's earnings forecast, you get 170 for a target
really.
price.
Hmm.
So I guess there's that case, but
Wait,
it's
you're saying 46 is the current PE or their average?
they're historic like for the last 5 years, from what I can see on like my E-Trade app.
46 sounds super rich. I thought it was like
It could, yeah. I mean, I don't buy it, but that's what it's saying.
yeah, when you look it up, I mean, I don't know if you're looking at forward or trailing, but this looks like
That's
trailing has been
trailing.
okay, this is saying it's like 30. I'm seeing 30.
I saw 34 for forward, but anyway, even right now, its current trailing is at like 32 and a half times
Hmm.
earnings. Um, yeah, this is like it's kind of crazy if you pay like that much for a company, in my
But see
opinion.
that's I think that's probably one of those examples of what I was saying where they're even though they're not growing 20 or 30% a year, but it's Nike and not anybody can just start a new shoe brand and take over Nike's business. So I think they're one of those companies that have that loyalty and that reputation. So that's why they deserve that high PE ratio.
Yeah, but that loyalty is only as good as how much money is in people's pockets. Like
Kind of, but I mean, look how long
say all
Nike's
of a
been
sudden the
around.
price of living even goes up more. What is then what with Nike?
People still buy it though. People still buy it.
It still won't have. I don't still don't see the big growth with Nike though. I
No,
don't
there's
see it.
not going to be big growth, but they're not going to like they're still going to be at the top of the list. They're still going to be one of the big players though.
Yeah.
It would I don't something big would really have to happen. Like it would take at least a couple years for things to transition. I don't know who would. I mean, is Adidas going to take them over or something?
No.
I don't see that happening.
It's not even about that. Like they could definitely have their number one spot like in a solid position, but it's more so like okay, if they're only making a few dollars a share on earnings and you're paying over $100,
Yeah,
it might not have that much room. It just might still move up a little bit, but then you're looking at like okay, it's like a 30-year payback period
yeah,
if earnings stay at this level. And why would you like buy that when you could buy like companies um in the 10 to 20 range? But like
absolutely.
Nike's
No,
got
that's
it.
that's a that's
That
a great point. That's a great point.
that's how I view it. But then what happens with those companies is that they get in all those index and mutual funds and they kind of attract more dollars than maybe what's warranted, even
Yes.
though they are the best company,
Yeah,
in what
that's
they do.
true. Now, if you're paying that high premium for it and you're not making your money back through share appreciation, if the stock was paying like a 5% dividend, then that would make sense. But that's not the case for Nike. They're not. I want to say it's 1% or less of a dividend. So yeah, that makes sense. If you're paying that high of a premium, you're not gonna make that much. So it doesn't make sense.
At least that's how you rationally try to like if you're looking at it, okay, like this is an investment and like I make my money based on when the company makes money,
Hmm.
then that's like how you can rationalize it. But in reality, the market moves however the market moves. It could go
Right.
to a 60 PE and not
Yeah.
make any sense and you make your money that way because just the next person in line wants to pay more than you did.
Yeah. That's absolutely true.
So that's the fun of the stock market, though. Like you could try to
Mhm.
be rational, but it's not how the market works all the time.
Yeah, that's a good point. All right, what's the next thing on our list?
Some big news about
It's
Mr.
Joe
Joey Biden.
Biden.
Yeah. It says,
Joe Biden exploring new restrictions on trading, or well, I guess you can say, yeah, trading AI chips to China. So I
and,
think they're trying to
and
take it
did he
more
also see that
serious.
some chips such as Nvidia, AMD, they fell down a little bit when that news
Oh,
broke?
did they?
Yeah, this past week it fell down a
You
little
mean you
bit.
mean the stock price?
Yeah, the stock price,
Well, I mean it's about time for Nvidia. What is the stock up like 2,000% this year?
something like that. But when AMD went down, I bought some more. I bought some more. I'm sorry, I'm a big fan of AMD. I know Nvidia probably leads the pack or whatever, but I
No,
think
I'm gonna look at AMD's PE ratio. I'm
I know. I'm
see
sure.
it.
I bet you
All right.
it's over a 60. I'm gonna say it's over a 60.
Oh, it's over 60. Yeah, so you're paying 577 times their earnings.
nothing you say about AMD is gonna deter me. Nothing. Nothing.
It's the
Nothing.
same thing with Taiwan Semiconductors. I've been wanting to buy that stock for a while, but I can't because when you run the numbers, it makes absolutely no sense. If that with that stock being anywhere near $100 a share, it's you're not going to make any money. It's the PE is so high on that
Yeah,
company.
that one's crazy. That one's crazy to me. But AMD,
No, but yeah, so maybe they just had like a maybe they had like a down border or something that's making that number a little bit higher. But it
Yeah.
looks like they've got some decent earnings on the way, which will bring that PE down a lot.
Hmm.
Yeah, but the one thing I will say, I don't think these restrictions are. I think there's going to be some more restrictions going on with the stuff with China going on, and I think now they're still kind of like figure out what AI is and what do they want it to do. So I think we're kind of like in that lane of what is AI, what do we want to do,
Ha-
things like that. But
Have you guys used AI in your daily life at all yet, or like has
I
it
would say
made an impact on you?
I've used ChatGPT quite a bit.
yeah, just that one for me.
What other I've also used those image editors where you can tell it what kind of image you want it to make, and it'll make you whatever picture. But the problem is most of the ones that are free, they normally come up with really bad quality images. Um, so I'm waiting for, like, I think Google and Adobe are working on their own. But those are the only programs I've used.
Yeah, I use ChatGPT at work sometimes, and you know, to do some of my work for me, make it a little bit
Hmm.
easier. I'm definitely excited to see that stuff develop and become like more mainstream and
Hmm.
whatnot. I think it'll make the life of an analyst a lot more bearable.
Yeah.
All
All
right.
right, Josh, I want to get to this next one on our list.
Yeah, this is actually Joby Aviation. I didn't also tell you
Yeah.
that this was kind of popular on Wall Street Bets a couple weeks ago.
Oh, was it?
It was. I should have bought in. But I guess the future is here. Joby Aviation rises 40% after getting a permit to begin testing their air taxi. So,
Yeah.
gentlemen, how do y'all feel about flying cars actually being a part of our society? And will y'all be using it if it's safe?
Hmm.
What you think?
I don't trust someone flying a car around. I
Yeah.
think that will take some time.
I'm not going in Virgin Galactic spaceships or these flying taxis anytime soon. I'm gonna wait till a million people do a test run on it first, and then I'll go.
Yeah, it's kind of crazy that it went up. Did it go up 40%?
Yeah, it went up 40. It went up 40% one day. It might have
I,
came back down a little bit, but
And I
like
did see that
we have
it was actually
helicopters.
it was a
I
stock
feel like
actually
yeah,
a big
helicopters
one.
are
I was expecting it to look more like like a electric vehicle, like a car, but it doesn't. It looks exactly like a helicopter.
well, like I would think a helicopter is like your substitute for a flying car. Like that's
I
how
was
you
thinking
Yeah.
use to
too.
like
Yeah,
get to like get to like places that aren't that far away from each other pretty quickly.
especially those like
Mhm.
You can land
quadcopter
anywhere.
things. Yeah,
Well, maybe I don't know. Maybe these are going to be cheaper or something. I don't know. I don't know if I could picture everybody driving helicopters around every day.
but
But
I did say your girl Kathy Wood and Ark Invest they were talking about Joby Aviation too a couple
hey, I'm
months
not a
ago.
fan anymore.
But I'm just saying they was talking about that a couple of months ago. I think.
I still am not a fan.
All
But I'm also happy for our next piece of news on the list. It's a good indication for two bank stocks that I own, and the U.S. stress test for the top 23 U.S. largest banks. It looks like the banks are doing good. It looks like they passed all the tests, and
round of
that's a good.
applause. We needed that
Chris,
round of applause, especially after the start of this year.
Chris, how do you feel about the banking situation?
I mean, that was definitely I don't know. It was a little shocking at first when it was unraveling. Um, but it's not my place where like I'm always, checking on how the banks are doing. But I feel like someone, somewhere, someone's got to be in position to like have foreseen, the banks having those
But
like
is
liquidity problems. And
but is there any of the banks that you have a position in, or you'd be interested in buying?
no, I haven't bought into any of the banks just because it seemed a little volatile for me, and I had already I liked where my capital allocation was already. But I think, after like a big fallout like that, and where some companies fall through, it's like it makes for a good opportunity for the sector because everything starts getting punished.
Yeah.
PEs start going down a lot, and you can get some good buys that are going to make you favorable returns for the long run.
Yep, that's right. Josh, what do you think?
I love it. I love it. We all need banks. Like banks gonna always be around, and we also need to be stable for us to get our cars, houses, things paid, things of that nature. So it is a good thing.
Yeah.
I know
Yep.
Chase is on the list, right? Is Chase on the list?
Yeah, I think Chase is they're probably number one. They're probably the largest.
God
But
bless him.
Chase actually no, Chase was actually their stock didn't fall like the others did.
That is true.
Like,
Yeah.
I bought US Bank and I bought Bank of America because those fell who knows how much. Those were $50, $60 stocks at one point and now they're like 30. So, but JP Morgan never really it's still at $140 a share. It's still up there. So, yeah,
Yeah, and it
that's
seems
the
that
situation.
most of the bank crisis kind of has been corrected and fixed. So maybe it's time for time to move on to what we another big problem, inflation. So that's a good thing too.
Yeah. Okay, the next thing on our list is not I don't know how much this has to do with a particular stock, but I just thought it was interesting to throw it out there. And that is that internships on Wall Street pay you $20,000 a month.
You want to be an intern at Wall Street now?
I think it'd be interesting. It'd be nice.
You can be like that one movie.
Did it?
What's that one movie called? The not the Wolf of Wall Street, the other one, The Big Short.
The other, oh, The Big Short. Yeah, that's a good
I mean,
movie.
the cost of living in New York is pretty high, so
That's true.
you gotta help the kids out.
I want to say the average. I'm pretty sure the average rent in New York City is $5,000 a month.
That's
So,
insane. And
so you
we're
got
not talking about houses and nothing. We're talking about one bedroom
yeah,
apartments,
just a little small
maybe
apartments.
two.
So,
That's like uh, barely as big as the room I'm in now. Like
yeah.
seriously.
So really, I mean, you're so really, it's more like a quarter of their income is going to rent.
Yeah.
So whatever, it's still a cool job.
All right. What's the next
Okay,
thing on the
next
list?
next up on our list is something that would have affected me a couple weeks ago, but not anymore, and that's that Walgreens is closing 450 locations. Luckily, I sold out before the stock dropped another 10%, and so Walgreens is like the worst performing stock the last 5 years. It keeps going down pretty much every single day. So I'm glad I sold out of that one. But yeah, well, I don't know. Walgreens is having issues.
Yeah, I don't understand what's the problem with Walgreens. Like you can, like you feel like a company such as so big as Walgreens has been a staple of America for
Yeah,
I don't know how long, and they're
I mean,
struggling like this.
I'm
It's
sure
kind of
there's I'm sure there's multiple reasons, but I know one reason is because of the stealing. Walgreens does not have high profit margins. I think it's like 3% or something. So when they have all this theft happening at the stores, I think that's probably a reason. So I don't know. We'll see.
it can't be that much stealing going on. That much stealing?
Well, remember Walmart and Target said they had I want to say it was hundreds of millions of dollars worth of stolen stuff last year. So yeah, I mean we're probably talking millions and millions of dollars of stuff stolen. I think.
Yeah, it's definitely a big problem. I used to my previous job was working for Walmart Stamps Club, and that was like a definitely serious issue that they would talk about in like the corporate meetings and whatnot.
Yeah. And now it looks like more and more of the consensus among these companies and probably the city governments is that they're kind of okay with people stealing stuff. Um, so because like Lululemon is another one too that kind of just said, or I think it's up to $1,000 worth of stolen goods or something like that. It's something where it's not a big issue. Just let them go, and that's kind of how they're
Well,
treating.
here's a good test to see how pervasive this may be. How many of us know at least someone that has stolen from like a Walgreens or a
Oh
Walmart
well, yeah,
before?
yeah, absolutely.
I have no
I could
comment on the
probably name
matter.
I could probably probably name a lot of people that I know that are like that would, I talk to and I'm like, oh, what'd you do today? And they're like, oh, I was shopping at Kroger and I was and stuff. And I'm like, oh yeah, like blah blah blah. And they're like, yeah, I didn't pay for like any of it. I'm like, oh,
Yeah. Okay, so I was a little bit off here. This is saying for Walmart, it's $3 billion worth of stolen products every year.
Hmm.
Now that's Walmart. I'm sure Walgreens is not as bad, but still, it's probably hundreds of millions of dollars.
Oh
So I mean
wow.
that's just gonna make those areas that they're pulling locations out of. It's just gonna make those areas go downhill. That's all it's gonna do.
Yeah, because a lot of Walmart's been closing stores too. So
Yeah.
all right, and
Okay.
let's kind of switch the conversation up. Let's talk about homes. How can you steal a home? Can you steal a house? Who knows? Have you tried stealing a house before? I don't know.
I
But
don't
it
know.
says the United States home sales have rose 12%. So Nico, did he buy a house this past week and didn't tell me?
No, not recently. The
Chris.
reason I put the reason
No,
I
no,
put
no.
this
Chris. Did he buy a house and didn't tell us?
not that I know about.
I like that answer because somebody can definitely take your name.
But but I am in the real estate business. I am looking to finish up my broker's license, so very soon.
Hmm, there you go.
hmm, the reason I put this on the list because I just thought it was interesting. I mean, people are even with the interest rates pretty high, people are still buying houses. So it should still, keep pushing the market up, keep pushing the prices up.
Yeah, but at the end of the
Well,
day,
I think the prices are falling a lot, with like which is
I,
probably
that
because
too.
people buy
yeah,
houses based on the monthly payment amount. So that monthly payment amount still works out even with the higher interest rate. People will do it.
Yep, and that's the
yeah,
one
because
thing.
no, okay. Okay, I thought, yeah, I mean, you're right. I thought I saw that prices were falling. I feel like I've been reading that. But then,
Prices are
how,
falling, and plus two, the
yeah, but
main
how
thing
can
is
prices,
people need somewhere to live. So
yeah,
food
I
and
understand
shelter,
that,
the
but how
most two
can
important
prices
things
be
ever.
falling? How can prices be falling if the sales are going up then? Like if
It's just
more and
like
more
it's
people are
sales
buying
volume,
houses,
right?
but if more and more people are buying houses and it's up 12%, that should make prices go up then, right?
You, yeah, I could see that. I could see that point of view. It could also just be a matter of like, all right, now like these sellers have been sitting on their houses for so long, like that they're just trying to move out, and they eventually kind of start lowering the prices more aggressively
I see.
to
Okay, I see what you're saying. I see
to
what you're
meet
saying.
that sweet spot where like transactions happen.
And see, this is probably why, because that's still going to contribute to inflation. So that's probably why the Fed is still planning to do at least another one or two rate hikes by the end of the year, and keep trying to push back on the inflation.
All right, I see
Now,
the next thing on the
the next
list.
thing on this list, I don't know why it's on the list.
Let's talk about it.
Yeah, I like it.
Yeah,
I don't know what it has to
I
do
like
with
it.
any stocks, but
let's just talk about it. We all like sports. I like playing sports. It could be anything: football, basketball, baseball. I can't swim, but I like being in the pool sometimes. Nico likes playing the guitar. That can be a sport.
guitar is
Um,
not a sport.
you played a long time and you perform. That could be some sort of activity, extraneous
Okay,
activity that can
however you want
somehow
to
be a
define it.
sport too. Chris probably loves playing sports as well. But today we're talking about one of the most underrated sports ever,
One of
pickleball.
the fastest growing sports on the market.
Pickleball is causing more than $500 million a year in injury costs. So Nico, when you putting this on a list, how in the hell is people hurting themselves playing pickleball?
Well, I don't know. I don't think it's a very intense sport. I think it's just because
I,
it's mostly old people playing.
no, I
And
know, because I've got old parents, and my dad, he plays pickleball now. He loves it.
Wow.
So so whenever I'm visiting home, we hit the pickleball courts, and it was just last week. We're on the court, and just like out of the corner of my eye, you see an older woman. She runs to hit the ball, and she trips up, and she just like falls. Didn't do anything to catch herself, and like
No way.
scraped her face
Wow,
on the ground, and like she got all scraped up and stuff. And I was like, oh, this is a
that's
bad
rough.
fall.
That's
So
hilarious.
so when I saw that on the run sheet, I'm like, okay, like that
I
happens for
mean,
sure.
I guess you could relate this to the stock market by like I slowly started buying United Healthcare and I guess you could relate it to that, but that's pretty much it.
You bought United Healthcare, and people are getting hurt in pickleball. I don't know if that's the correlation.
Well, I
Jesus
don't know
Christ.
how else you're going to relate it to. Maybe you can relate. I know what you can relate it to. This is probably going to help out Dick's Sporting Goods because they're going to sell more inventory now.
That too, yeah.
All
More.
right, what else do we have on the list? Oh, this is
It's
interesting.
fun. It's a fun game.
Yeah, I haven't played yet, but I see like just down the street from me, they opened up this new facility that's dedicated 100% to pickleball. So definitely, there's an audience for it. Okay, now this next one on the list is going to be a little bit outdated now, but you can still bring it up because it is cool. It is interesting.
Oh yeah. Okay, so this past week was for Fourth of July, and it says Pepsi came out with a Fourth of July sauce that mixes ketchup and Pepsi. That sounds like some of the nastiest thing ever. I hope Pepsi go out of business. Whoever thought of it gets fired. And yeah, how y'all feel about that new sauce?
Well, the way I look at it is those are two very successful selling products, and I mean, how can you go wrong if you mix them?
Uh,
It it
Okay, well,
seems
hold on, hold on,
it's
hold on, hold
just
on, hold on, hold on,
I
hold on,
don't
hold
know,
on.
man.
Okay, so mix gas with putting gas in your Nike shoe. Then, like what?
Pepsi and ketchup. Like it seems like okay, if I had a plate, some chicken, some rice, some ketchup, and I'm drinking Pepsi, and I spill my Pepsi, and a little bit of it gets in my ketchup, I'm going to be upset. Like
Yeah.
that will ruin my meal,
I
I
mean,
think.
I would be
So
curious. I'd be curious to see what is the
I don't see it.
consistency like because I can't pick like you can't have sauce that is liquid like Pepsi, right? So I'd be interested to see what the consistency looks like. I wonder how many units they sold for
Hope
Fourth of
We
July.
should
zero.
have gotten some. We should have gotten some to test
I
ahead of
know.
this
I wonder if
podcast.
it's still for sale.
It might still be. They probably still got it. It's only a couple days after. Probably go to Target.
I think they really ran out of ideas and I think they're desperate for new products. So they're doing all they can to come up with something innovative.
Yeah, but I feel like most companies do like different holiday themed
Oh, wait a second.
stuff.
I have a new detail on the story. It's called Kolachup. Cola chup or Kolachup.
Yeah, I think that concludes this episode, episode 51 of Stock
No, I
Talk.
don't think so. We got two more. We got two more details to hit
All
here.
right, hurry up. We're getting up to almost 3 o'clock. Let's go.
It looks like barbecue sauce. That's what it looks like. Okay. So the national, how we just said, even though the home sales are up 12%, the national median rent is $1,700 and is down 0.5% year over year. So slowly it is falling, and this is the first time it's falling in over 3 years. So I guess that's a good sign. The market's still hot, but it's getting healthier, I think.
Yeah, it's good for all, like especially all of us people starting out right out of college and looking for our
Yeah.
first places to rent.
Yeah.
Yeah,
Yep.
And especially with the prices of housing and rent being so high this past year or two, it's good to see it
well,
going down now, too.
the cost of housing is definitely on the higher side. Even despite the prices falling, the interest rates are still going up. Um, and like in a city like Chicago, costs are so high too.
Mm-hmm.
Um, but when you're in the rental market, it's definitely the affordability is still there versus buying.
Mm-hmm. Okay, then the last piece of news we have for today is actually probably my favorite on the list, and that is that Tesla set a new record for global production in Q2 with 479,000 vehicles. And so the stock's at what, $280 a share or so. I actually sold some the shares that I bought most recently. at the beginning of the year. I sold out of those this past week.
Oh, you did?
Yep.
How you feel
I
about
was
that?
I was up. I mean, I still have the majority of my position I still have, but the shares that I bought 6 months ago, I was up 120%. And I feel like, I feel like there's just a good of a chance that the stock keeps going up, that the stock keeps going down. I feel like it's a 50-50. So I'm happy with the 120% in 6 months is good enough for me.
Hmm. Okay.
That's good enough for you.
Yeah, that's good enough.
Oh gosh.
Chris,
No, that's
what price would you buy Tesla at?
I don't know. They're profitable now, right?
Oh yeah, they've
I
been
think
profitable for 3 years.
the thing is, I think it's always just been too aggressively priced, but
Yeah.
it's definitely a very neat company. Love what they're doing. Love their cars and stuff. I'd love to own it, but it's never made sense in like the strict way I try to operate to buy
Hmm.
it. So I haven't been able to get in and all the ups and downs that I'm sure shareholders have of that stock because
I mean, I
it has the
agree.
highest highs and the lowest lows.
I mean, I agree with you because ever since it had its huge run, it is incredibly richly traded. But I think 6 months ago, when it was $100 a share, that's the only time when I would say that it's when you were getting it at a really good deal. The other thing to look at is how you said earlier, which if you do want to use that, pretty much you pay 2 times its earnings growth, PE wise. The stock, the company is growing at 40-50%. And so if you're paying 80 times earnings, 90 times earnings, it kind of makes sense. It sounds
Yeah,
like it
yeah.
feels like you're overpaying, but I mean, they're a fast growing company and they have so many different things as far as energy storage, and they're making robots. They're going to have
They're so far ahead of all competitors on the electric,
yeah,
you know,
yeah.
automobile front. Like that, it's just like so. There's definitely cases to be made for when it has its down periods to get in because like the charging stations, that's going to be such a huge concept in the coming years.
Yeah, and did you see how
And
a couple weeks ago when they gave away the rights or whatever? Not gave away the rights, but they're pretty much letting Ford and GM use their charging stations. And I think it was like a couple $1 billion that it cost Ford and GM or something like that. So I don't know. They're how you said they're very
the
far
position
ahead.
well, yeah.
You know, so yeah, I'm bullish. I'm bullish long term, but it does trade rich. It does.
All right. Just
I
tell
like it.
Eli to do better with Twitter, and I guess I'll be fine with him. Just be a little bit better. Don't be stupid.
Yeah, that's the other thing. He said he's hiring a new CEO for Twitter, so I think that helped out the stock too. People like to see that he's focused on Tesla, so that's another thing.
All right. And yeah, I think that's it. This is about the hour or so up. We're at an hour now. So we got anything else to add before we
I
end the
think
show?
that's good. I think that's good.
Chris, you got anything else to add?
No, I hope everyone that's listening to this has a successful back half of 2023 in
Okay, wait.
their portfolios.
Before we end, I want to say one thing. Chris, I want you to pick one stock for the next 6 months to 12 months. What is it going to be?
Oh gosh, next 6 to 12 months, I'm going to pick Caleres, the shoe company.
I'm
Hmm.
going to write that down
They own
because I've
like
never heard of that.
yeah. They own like 20 shoe brands. I think they have like famous footwear. Um, and
How,
it's
how
just
do you
like
spell that?
it's Caleres, ticker symbol Cal, Cal. And it's just it's definitely like had some good runs for me. Like when I bought in at low points, and it's just like a consistent consistent earnings and relatively low PEs, and it's just like it gets punished in the stock market during like certain time periods just because it's not one of those hot Apple, Meta, Google stocks, but it's got like solid foundations and good management. So
Hmm. Okay, interesting.
say, but honestly, wait, if I had to go with one more, when I'm doing my analysis, there's this
Mhm.
like asset management company called AMG that that's giving me like the highest run ups, like the highest return potential.
Okay.
Okay, cool.
What about you guys? What are your 6 to 12 month projections that I should look into?
Man, you know what? I'm selling down. AMD. I don't think so, but I'm going AMD. Just because Chris was talking bad about it,
AMD all the way,
I'm going AMD. AMD, baby.
ride or die.
Okay, let me check. Let me check mine.
Do 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 do.
You know, I went for Kohl's when they're in like that. They're like looking to get bought
I
out.
did too.
So I really like that story. So I was like, all right, I'm just gonna put all my money into Kohl's and it should work out.
Yeah.
It seems like a solidly functioning company. And I think that's the last time I put all my eggs in one basket
No,
because it did not work
I
out.
did that same thing when Kohl's fell. I think whatever it was around $20 or something. I bought it, and then it went down to like 18 or 19, and I kind of it wasn't nothing was happening. So I think I sold out. I broke even or something, and now it's at like 24. So now it's starting to move a little bit, but it just it I got
Yeah,
I
no, I
got
was I was buying in the 40s.
I got upset with that one because I was basing that off of their equity on the balance sheet was more than what the company was trading for. It was like 2.4 billion on the balance sheet and
Oh yeah,
$2 billion market cap. I was like, okay, this is easy money. This should make sense. But nope, the market can do what it wants and just keep going down.
exactly. I learned, and I the way I structure it is like I sell puts and I sell calls and stuff. So like I had great break even prices on all of these because I was getting huge premium. So I was like, I may have had like low $30 break evens, and this is when the stock's trading like the mid 40s or something. I'm like, oh, I'm good. Worst case scenario, I'm fine. It fell
Mhm.
to the 20s. Oh man, it was not fine.
Okay, you know which ones I'm gonna pick. Um, if you want a more solid, if you're looking for a solid company, I would go with Pool Corporation. If you're looking for something where it's more of like a turnaround play and it's not the greatest ran company, then I would go for Advanced Auto Parts. Those are my two picks.
Interesting. What's the first one?
The first one is called Pool Corporation. They're the largest uh, wholesaler, distributor of pool products.
I like it.
So
How'd you
that's
how'd you
actually
find that?
I found that by watching YouTube videos. But that guy or that company is they're actually a very well run company. It's just I don't know if the PE is super cheap at the moment, but I started making a position. But that one it's a solid business model. They got solid financials. They put up consistent earnings growth and stuff. So that's a very solid one.
I can see the case for that. It's
Yeah.
it's trading like it average PE for the last 5 years is around 30 and it's trading at 21 right now.
Oh, okay. Yeah. So maybe it is a
That
good time to buy.
that's like a 50% upside.
Yeah. So I like Pool Corp. Advanced Auto Parts. My thesis for that is more like um the stock fell like 50-60% the last month or so because they had a huge drop in earnings, which makes sense. But a bunch of insiders bought back in, so I think that's a good sign. And then it's the stock was $270 a couple years ago. Now it's only like 60, or it's like 70. So I think it's a good there's a good chance it'll move back up. And yeah.
Nice. We'll have to follow up in 6 to 12 months and see
Yeah, right.
who pans
I
out.
will.
I'm going to be happy when Josh's AMD is lagging behind
Oh,
Apollos.
okay, okay, okay. I'll take that as a challenge. Take that as a challenge. Take it. But like I said, this concludes this episode 51. Round of applause. Chris, thank you once again for joining us.
No, thanks for having me, guys. It was a good time. Enjoyed talking through the stocks and some random topics and relating them back to the stock market.
There we go. There we go.
Yeah. AMD is 469 PE ratio.
Okay, leave it alone now. Nico, you got anything else to add?
No, nothing else.
All right. Now, everybody, you have a good one, and to greener days ahead. Bye bye.
Bye.